Welcome back. Venezuela's economy is coming under more pressure as its inflation rate continues to skyrocket. It's now 63%. It is Latin America's highest, and that's leading to some real fears that the country may find it very difficult to pay off its debts. Markovits reports.
Fears are growing that Venezuela may soon follow Argentina and become the second Latin American country to default this year. Investors are worried that the country's declining oil production is not enough to pay off more than $80 billion in debt. But Venezuelan President Nicolas Maduro rejected those claims and affirmed that Caracas would honor its obligations.
What has shown in 15 years of revolution is that Venezuela honors its commitments, and this year is no exception. We are ready to continue fulfilling our international commitments down to the smallest detail, down to the last dollar.
Investors are also worried that Maduro will not put in place significant economic reforms. Last week, the Venezuelan president reshuffled his cabinet and replaced longtime state oil company chief Rafael Ramirez, who had been advocating easing the country's decade-old price and currency controls. Included in his plan, raising pump prices for Venezuelans who enjoy the cheapest gas in the world. Some economists blame these controls for the shortages of dollars that has caused Venezuela's staggering inflation and widespread shortages of goods. But with declining poll numbers, Maduro may not want to implement policies that would hurt his key political base, the poor.
Raising gas prices in such a drastic way, as Ramirez proposed, would be a big political cost to Nicolás Maduro's political base. This would really hurt the pockets of the Venezuelans, who in the last 12 months have suffered an inflation rate that reached 60%.
Although Ramirez's ouster from the economic post to become foreign minister was seen in many circles as a demotion, political science professor Enio Cardoso believes that Ramirez is actually gaining more power.
We could say now he is even more powerful because every decision in foreign affairs will have to go through Ramirez. He is now second in charge of the government because Maduro was also foreign minister during Chávez's term. Now, in Maduro's term, Ramirez is his foreign minister, so he is now second in the decision-making process after the president.
In the coming weeks, Venezuela's currency is expected to trade in the black market at a record-breaking 100 bolívares to $1. This is 16 times more than the official exchange rate. Just another sign that Venezuela's economic problems are not getting any better. Markovits, CCTV, Caracas.